Good morning. My name is Corey Kant, Dr. Corey Kant, and I'll be your instructor throughout this course. And I'd like to take a few moments to introduce you to Accounting 504, Corporate Financial Reporting and Disclosure here at Excelsior College. If, as we speak, you hear a number of dogs barking in the background, please try to disregard that. I actually have 4 dogs and we try to keep them under control, but that doesn't always happen. For the course, this course encompasses an in-depth examination of financial disclosures required of firms that sell stocks and bonds to the public, plus other sorts of business entities. You'll notice that we emphasize how firms use financial reporting to achieve ends such as managing earnings or making the firm's balance sheet appear as unblemished as possible. By the end of this course, you will have an appreciation for information that might be missing from primary financial statements, those submitted in accordance with generally accepted accounting principles or GAAP. You will also understand the context of important footnotes and the tools used to conduct financial analyses using the information contained in footnotes and other areas of a firm's financial statements. This course will use a combination of textbook problems, case studies, and most importantly, actual financial disclosures. The course is geared for students going into public accounting, investment banking, equity research, or consulting. In this course, we will learn to prepare financial statements or financial reports and disclosures in compliance with all applicable rules and regulations. We'll analyze how reporting, disclosure, and compliance standards affect the quality, validity, and trustworthiness of reported submissions. One component of your coursework will have you develop the skills to compile pro forma financial statements to enable investors, analysts, and others to use and make important financial decisions. Another component of your coursework that you will see takes on somewhat outsized importance, and this is the issue of external regulatory bodies, namely the SEC or Securities and Exchange Commission, and the PCAOB or Public Company Accounting Oversight Board. Audit risk may carry legal liability for a public accounting firm performing audit work. You may be familiar with audit practices. An audit makes inquiries, performs tests, and collects supporting documentation. If errors are caught during testing, the auditor reports or requests that correcting journal entries are made. At the conclusion of an audit, after any corrections are posted, an auditor provides a written opinion as to whether the financial statements are, at that point, free of material misstatement. Managers are then allowed to respond to the auditor's recommendation, and all of this information is included in audits. The Sarbanes-Oxley Act of 2002 established the Public Company Accounting Oversight Board and empowered this board to establish, by rule, accounting and other professional practice standards for registered public accountants or accounting firms to follow in the preparation of audit reports for companies, issuers, and broker-dealers. The reason that this entity was established was to address accounting scandals occurring in the late 1990s, and you may or may not be old enough to remember things like Enron, WorldCom, Tyco, Lehman Brothers, and other similar accounting frauds. These or accounting scandals. These scandals implicated auditing firms or CPA firms such as Arthur Andersen and PricewaterhouseCoopers. And those firms were implicated in the losses that were incurred by investors. Thus, this board now protects investors and other stakeholders of public companies by ensuring that auditors also follow strict guidelines. So together, these two regulatory frameworks are designed to foster accuracy in financial reporting. We will be engaging in weekly discussions. These are very meaty discussions, very substantive discussions that allow us to exercise our managerial skills or our accounting and auditing skills. We will also have quizzes, embedded quizzes in modules 3, 5, and 7. In module 2, we will have an assignment on financial reporting standards. In module 4, you'll get to do an integrated case study or integrative case study regarding Walmart. You will do an analysis of the financial position of the firm and any risks that you see. Your final assignment, an exciting assignment, as well, that's my opinion, an exciting assignment you will do in module 7, which will be turned in module 8, allows you to assess the quality of earnings reports using both GAAP and non-GAAP principles. So, with that being said, that's the basics of what we'll be looking at throughout this term. And please come to me with questions. I'm always available. The best form of contact is email. That's the form of communication that I look at on a daily basis. And I always want you to know that I'm never too busy to assist you. That's what I'm here for. So I look forward to meeting all of you, and have a great semester.